Hey, Stan Lesniak, founder of the Orange Line Living Team and broker of Optime Realty, which is also home to the Carrie Scholl team. In today's Ask the Real Estate Agent segment, I'm going to answer a question that a lot of buyers and sellers actually have been asking about rising interest rates. So buyers have, been worried about, is this going to change the overall affordability of homes? Sellers are worried about, will this potentially make my home go down? So a lot of people who are newer to the market are only hearing interest rates are going up, and it's true that recently they have. Right now they're in the mid-4 range, so right around 4.5, sometimes a little more or less, depending on various factors. And that's more than they have been recently because they've been at historic lows. In the last 3 to 5 years, there's been a couple times when they've been under 4.0, even close to 3.5 on the 30-year fixed. And those, really represent the low of the all-time low. The good news is we're still in extremely rare territory. I've looked at charts of interest rates going back to the early 1900s, and they've only been under 5% at 2 different times in that time period. Most recently they dipped under 5% in the 2011-2012 time frame. Prior to that, they had not been under 5% since right after World War II. So before World War II, they were much higher than 5%. They came down under that level for a little bit, and then they went back up and didn't come back under 5% until about 6 years ago. And they dipped under 4% a few times. So, overall in the historic range of interest rates, we're in great shape, great territory. I remember when I bought my first home about 15 years ago, people telling me I got a great interest rate because it was 6.25 on a 30-year VA loan because I was in the Navy at the time. So we're still a 1.5 or so under that. And, for those of you that maybe remember buying a home 30 years ago, or maybe your parents or grandparents, they may have experienced interest rates that were as high as 15, 16% in the early 80s. My parents definitely remember that. So overall, we're still in great shape. So I think if you're a buyer, the way to look at it is there's a lot more potential downside. Interest rates could go a lot higher than they are historically, and there's only a little bit of room, to get to the historic low. So not much upside in terms of getting cheaper money. I still think that now is a great time to take out a loan, 30-year loan or ARM. They're all great interest rates when you look at them in historical context. In our area, we haven't seen this rise in prices cause any effect on price. The inventory remains extremely low. Most areas in the DC area are at 1 to 2 months of inventory. Anything under 3 months is considered a seller's market. Anything above 6 months is considered a buyer's market. The in between, the 3 to 6 months, is considered neutral territory. So we're definitely still in a strong seller's market. So if it's an interesting time period. If you're a seller, it's you still have the upper hand as long as you price it right, have good marketing, have the right team helping you out. So that's it for today. If you have any other questions, please let us know. We'd love to answer them in our next segment. Thanks a lot.